Hello everyone. Today I think it's worth to share what's my trading position and what I'm planning to do with it. So hope it will help everyone what I'm thinking about the present scenario. First of all, I guess same as everyone, I'm also sitting with loss with my this week trading. And in the last 3-4 sessions, my entire equity investment portfolio lost around 5%. Now coming to my trade details, based on my last Saturday's video when market dropped to around 22,300, last Tuesday I did the put spread for June month expiry. Basically sold 23,000 Nifty put for 864 rupees and bought the 20,800 put for 140 rupees. So thought in this way I will make money when it goes about 22,300. I mean, I never let any of my options to expire. Always I book profit if it crosses 5,000 to 6,000 rupees per lot. Basically, so far I was taking the advantage of changing premium. But this time, because of yesterday's 300 points Nifty fall in one single session and sudden increase of VIX, this one looks like very challenging. Now I'm with loss approximately 3,000 rupees per lot. So what I am going to do next? I mean, I know it's a temporary hiccup, but my view in short term is still positive and I'm convinced with that. According to me, my view will change in two scenarios. One, if India's inflation increases means. Two, if oil price crosses above 100 to $110 per barrel. And neither of that I don't think will happen before June month expiry. But there is an additional uncertainty factor now, election results, which I didn't had previous experience so far. Usually I don't do emotional trading, and yesterday I was very close but managed to keep me calm. So let's look at the history what happened in 2019. Last year the election results was released on 23rd May. For that, Nifty peaked at 2nd May, 20 days before results, and crashed 5% in the next 5 trading sessions. And then it increased back to the point again. During that time, VIX increased 16 to 26, then gradually started to decline. And PE multiples from its peak, it dropped 1.5. Now coming to present day, election results scheduled to release on June 3rd. I don't want to speculate the election results. Let's assume we will get the stable government. At present, PE multiples already dropped 1.5. However, VIX haven't increased that much and Nifty also didn't drop that much. Nifty dropped only about 3%. So by comparing the last election, Nifty might drop another possibly 500 points to 21,500. And similarly, last election's May 10th low might be this year between May 13th to 23rd. Since US inflation for April month is scheduled to release on May 15th, which will define the global momentum. So in this scenario, possibly I'm going to do two things. If market further falls, then on May 13th, I will average my position possibly to around 21,800, above which I kind of make profit. Then on 23rd June, based upon the further fall size, I will average again one more time. Even after this, if I end up in loss means, then I will accept my fate and will book the loss. I mean, I hate and don't want to do this mindless blind firefighting, especially when big investors trades with algo trading. With their capability of margin, with that AI computing power, I don't think I can able to play their game and win. So don't want to do and never did this firefighting. So let's see, I will keep you all posted. But again, disclaimer, it's not recommendation. It's just my thoughts, wants to share what I am thinking and how I am planning to manage this situation. Again, even now, only 50% of my mind telling me to do this two adjustments like averaging on 13th and 23rd, and 50% of my mind telling me to not to touch at all any, just let it do expire. Anyway, that's my trading position. As I said, I hate to have lots of confused multiple strategy open position. Let me know what your thoughts on this in the comment section below. Now coming to today's market, last night in US, new jobs insurance claims data increased by 22,000, more than what analysts expected. This is the first positive. Then earlier yesterday, Bank of England kept the interest rate unchanged. In addition to that, its governor mentioned that interest rate cut is imminent. This increased the whole Europe sentiment. So all this together made the Dow Jones to close positive for the 7th day in a row. In the end, Dow Jones up by 0.85%, S&P 500 up by 0.51% and Nasdaq increased 0.27%. In case of VIX, it dropped another 2% and moved to 12.7 from 13 on day before yesterday. In India, VIX keeps on increasing, whereas in US it keeps on decreasing. In direct contrast to US market, all four major Indian areas closed significantly negative. Infosys and ICICI Bank ADR down around 0.7%, whereas Wipro and HDFC Bank dropped over 1%. So clearly, ADR indicating both the sectors to trade negative. However, early morning today, GIFT Nifty increased and closed at 22,128, equating it with our spot market, indicating 50 to 60 points gap up opening. About institution, for the second day in a row, FIA was in a selling spree. Yesterday also, the net sold for almost near 7,000 crore rupees, and to some extent, DI supported the market by net buying for 5,640 crore rupees, but not large enough to arrest the fall. Regarding oil, it haven't changed much. It was almost same as yesterday. At the time of this video, WTI crude trading around 79.5 US dollars per barrel and Brent crude trading at 84 US dollars per barrel. As a summary, US market closed positive with okay global momentum. In line with that, GIFT Nifty indicating gap up opening. But the problem is, GIFT Nifty positive was not at all reflecting on actual spot market. Even if it was in the last 3-4 sessions, it was used as selling opportunities. Anyway, at least those selling pressure was visible on Indian ADR, as all four major stocks closed significantly negative, despite was negative in the last 3-4 sessions. Then, as per stock open interest, Muthoot Finance, Asian Paints, Berger Paints, Voltas, Bata India, Bajaj Finserv, and Reliance Industries got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Sun TV Network, Mahindra & Mahindra, Pidilite Industries, Hero MotoCorp, and HCL Tech got an increase in open interest along with a positive price close, indicating the long build-up. Then, about the things to look out. Today, Aker Motors, Cipla, Union Bank of India, Bank of Baroda, Bank of India, and Kalyan Jewels are some of the major Indian companies' earnings results are still released today. Regarding macro, around 12:30 p.m., UK's GDP data and manufacturing production growth is due. Then in the aftermarket hours, India's manufacturing output and industrial production is still to release. For US, Michigan consumer sentiment and Michigan inflation projection are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 75 points gap down and it was under pressure throughout the session. As a result, Nifty closed below psychological level 22,000. Thus, on the daily chart, Nifty formed long bearish candle. First it opened below 22,300, then it closed below 22,000 mark, which itself a huge negative. In addition, Nifty closed below 100-day simple moving average and RSI got the negative crossover. RSI value dropped to 37. So the overall trend also looks extremely weak with a possibility of a further fall in the near term. On the higher end, the immediate resistance is visible at 22,200. Then on the lower side, 100-day exponential moving average value is 22,820. So possibly that will act as the immediate support. Then in case of Bank Nifty, it opened flat and continued its downtrend for the 7th consecutive session and closed below 47,500. Thus on the daily chart, Bank Nifty also formed long bearish candlestick pattern. Furthermore, Bank Nifty closed below 50-day exponential moving average. So Bank Nifty's next immediate support is at 47,400 and a breach below this level could intensify selling pressure towards the 47,050 mark, corresponding to the 100-day exponential moving average. And on the upside, immediate resistance is at 48,000 and a decisive breakthrough above this resistance level may trigger short covering moves towards 48,500 mark. On the options front, the maximum call option open interest was at 22,000 strike, followed by 22,200 and 22,700 with meaningful new call option writing at 22,000 strike, then 22,200 and 22,100. Whereas on the put side, the maximum open interest was at 21,900 strike, followed by 21,800 and 22,000 with meaningful new put option writing at 21,900 strike, then 21,800 and 21,700. Thus, from options data, 21,900 is the immediate support with resistance at 22,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.